Lucid is a really interesting company because it's catering to that niche of ultra luxury high performance sports sedans. The problem is though, to produce a car that caters to that niche market is really expensive, and we can see that their standard line of cars, the Air Pure, costs almost $90,000 already. And with the performance of the Air Pure, you're not getting much more than any other EV car that is in that price segment at the moment. And if you want to get actually what Lucid is promising you, so a really high performance sports sedan, then you really gotta put out a lot of money. And we're looking into, as example, the Air Grand Touring, which costs $150,000, the Air Dream for $170,000, and then the top of the line, the Air Sapphire, which is available next year, which is going to cost you $250,000. That is $250,000. And the problem with those pricing is, of course, that you're first of all competing now with all other luxury sports cars. You're more expensive than a lot of those other luxury sports cars. So you're really in the high end. So why should anybody actually buy your car if they could buy, literally a Lamborghini or something for it? And the second problem then, of course, is if you're pricing a car at $100,000 to $200,000, your addressable market becomes really small because, 98% of the population in any country cannot afford to buy your car. So you're now having a really expensive car to produce. You're having a really high price tag, obviously due to that. And you have a very small addressable market with very high competition. So the market in which Lucid is operating in is really difficult from my point of view. With that said, if you're new to the channel, don't forget to subscribe and smash that like button. Also leave a comment on the bottom what you think about Lucid, because here we're trying to build a nice community that can help each other with investing and with the stock market. Due to those 2-3 problems that I've just mentioned, Lucid is facing a real difficult time in the market at the moment. Back in the beginning of this year, they actually mentioned that they will be able to produce up to 20,000 cars. But in February, they already had to cut their forecast down to roughly around 14,000 cars. Then again in August, they had to cut the forecast again to 6,000 to 7,000 cars for the year. So from 20,000 cars, they actually cut their production forecast to 6,000 cars. That is, what is that, 60-70% decrease in forecast, which is obviously really bad performance. And if we're looking into other EV companies such as Polestar, which I've just reviewed a few days ago, they are actually able to increase their forecast because they're pumping out so many cars, whereas Lucid is really struggling. And in my opinion, I do think that is because of their increasingly high price tag. Who is able in the current macroeconomic environment, to push out $250,000 for a car? So I think Lucid is on a real difficult track here at the moment. For me personally, I think it's ridiculous that in their Q3 of 2022, Lucid is now citing that they are on target for the 2022 production of 6,000 to 7,000 cars. Because they're not. Their target was actually 20,000 cars. So you can't tell me now that you're on production target, right? Because you're down 60-70% off your target. But anyways, let's continue to go through their Q3 because there's a lot of interesting things here to learn about the company. Jumping over into their financial statements, let's have a look into their balance sheet. We can actually see that they do have a fairly high amount of short-term investments in cash, right? That's roughly $3.3 billion, which is totally fine. I like to see companies that have a bit of cash on hand or short-term investments on hand, right? Because it just gives them a little bit of flexibility. So absolutely no problem here. They do also have, of course, their property, plants and equipment, right? So their whole factories and so on, which is worth roughly $2 billion. So that's totally fine. Total assets of roughly $7 billion. That is down slightly from last year, of course, because there is certain amounts of depreciation and cash burn here. On their liability side, we can see that they don't have a lot of current liabilities, which is good. That's roughly 800 million. They can easily cover that with the cash they have on hand. So that's definitely, nice to see. But what does worry me a little bit is the long-term debt, because we see they have roughly 2 billion in long-term debt. Obviously, it's still covered with cash and cash equivalents. But 2 billion for that company is fairly high in my opinion, especially now with rising interest rates. If they have to refinance, they're actually going to have to pay a lot of interest on those 2 billion of debt. Jumping over into their income statement, we can see that they made revenue of roughly 200 million. That is up dramatically from last year, of course, the same way it is with Rivian and it is with Polestar. So all of them are kind of ramping up production. So of course the revenue is increasing. But we can see that we do have high costs of revenue of 500 million. So in total, on a gross profit, we're still losing 300 million every single quarter. So that's, a substantial loss that we're incurring here. Comparing it to, as example, Polestar, which has finally reached profitability on a gross profit basis. And of course, that gross loss kind of pulls through all the way into the net loss, where we lose, $500 million per quarter, which is substantial. If we analyze it, that's roughly 2 billion of loss in 2022 that I'd expect to see. And that is, one of the worst performance of any of the EV stocks that I have, reviewed on this channel so far. And jumping over into the cash flow statement, one of my favorites, we can see also here that we're actually burning through $2 billion in cash flow every single quarter. So it's really painful. We see last quarter we actually had ending cash and cash equivalents of roughly 5 billion, and then this year of 2022 we have left over only 1.3 billion. And the problem here is just that if Lucid continues to burn through cash like that, their cash and cash equivalents, right, that we actually just mentioned is fairly okay, is going to be, just burned off very, very quickly. And the management actually recognizes that by themselves. They say that they only have cash left until the end of 2023. So roughly, 4 or 5 more quarters, and then they will get in trouble. And because of that cash burn, actually Lucid is already going out. They're looking for more funding and more cash. Then all of that is of course then going to somehow dilute current shareholders. And it's one of the reasons why I'm not invested in Lucid. I think it's extremely risky. They have that really niche market, which is very nice. Their products are fantastic, but it's expensive. They can't really reach profitability at the moment. They're still burning through cash. They don't have, 13 billion on the balance sheet, like as example Rivian, where they can survive for years, right? They're actually talking, 2 years maximum. So it's really, really a risky investment at the moment. If they can survive that phase though of the next 2 years, then looking into the really, really long term, maybe they will be able to really perform well. But at the moment, I just think it's very, very risky, and I'm personally not getting into it. Well, thanks for watching. I hope you enjoyed, and see you guys next time.